When you do get a situation like the US dollar Swiss franc, what you should do is leave both your buy entry and also your sell entry in the market until one of them is triggered. We don't know which one will be triggered, so you leave both orders in the market until one is actually triggered. So here we are. It's about 10 a.m. Eastern Time and it's about 3 p.m. GMT. We've got some very nice profits accruing on our positions, somewhere in excess of 600 points. And sometimes what we do is we actually send you a signal if we think a trade has run a nice distance and you should close out. We'll send you a closing signal, and this will say trade closed due to time out. What we've done is we've looked at it and we thought, okay, this trade might not run an awful lot further, so it's a good idea to take your profit off the table. As a rule, our system generally closes at about 4 p.m. Eastern Time, about 9 p.m. GMT. So if we've got some very nice moves on a day, it would be a shame to see them reverse. Also, we don't like to hold our positions overnight because you can have news come out and you can't monitor your position necessarily. Also, some brokers actually stop trading at certain times, and you also have the problem of rollover. This is where your broker carries your position to the next day and he will actually charge you for rolling you into that new position. So we don't like to incur rollover, and we don't like the inherent risk with holding a position into the night. So we suggest that you close about 4 p.m. Eastern Time. You can close later, or you can bring your stop right up to protect your position, but you're probably not going to get an awful lot out of the market, because after about 4 p.m. Eastern Time, unless there's news coming out, there really is not much activity in the market, and you're better off taking your profit. A little bit of advice on trading our system. What we like to do is we like to trade the markets when they're behaving normally. What we mean by this is we don't trade on public holidays or on the eve of a public holiday, or when maybe the European market is closed and the US market's opened, or vice versa. We like to see a normal day with our system, and our system responds best when it's trading, in effect, a market with full liquidity, i.e. full range of movements of the market. What you don't want to do is implement our system on public holidays or the eve of public holidays, long weekends, etc., because you tend to get very stilted moves within the market, and you just get whipsawed all over the place and you don't make any money, which is not the whole purpose of trading. So please bear that in mind when you trade our signals. It's been a great day today. We've made over 600 points, and what we have decided to do is send an early closeout signal. You will see it says on most pairs, position closed due to timeout. In certain circumstances, where we feel that the market has made a strong move, what we do is send you a closing signal to tell you to exit the trade early. Markets are constantly trying to find an equilibrium or balance point. After long moves, they become stretched, like a piece of elastic. The smart trader takes his profit when it's there. What we don't want to happen is for the market to reverse and take our profits back. Finally, this video would not be complete without a discussion about risk. Although our system is one of the best we have ever seen, the markets are like life. They are chaotic, and they can do anything. Even though we've never had a losing month, you cannot assume it will never happen. There is always a trade out there with your name on, ready to blow your account. This is why we limit our total risk on any one day to 3% of our total capital. Remember, if you risk just 3% of your capital every day, then over a month, on average, you're putting 60% of your account at risk into the market. Because our signals generate a approximately 2,500 points or more in a month, you will make money when you trade our signals. What we do not know is the order the winning and losing trades will occur in. So it's always of prime importance that you control risk on every trade. You can't enter with more risk than your account will bear. Let's say that you had a $5,000 account and you wanted to trade $10 a point. Now, potentially, you could lose 200 points on the day. You never know. And that would be $2,000, and that would take up almost half your account. But if you said, I've got a $5,000 account and I'm only going to trade $1 a point, and you had a 200-point losing day, you'd only lose $200, which is less than 5% of your account. So, what you have to do is always control risk, because you don't know which days you will make money and which days you will lose money. Risk control is the only thing that a trader can control in the market. You can't control the market. You can't make it go up and you can't make it go down. All you can do is control your risk. When you have a winning system, the system will make you money over time. It's up to you as a trader to always make sure that your risk on each trade is in line with your account size. If you risk too much, I can guarantee you will blow your account, even with the best system in the world. Well, good luck, and I wish you all the very best on your trade.